I am an associated member of T3 Trading Group, which is an SEC registered broker, dealer, and member of FINRA SIPC. All right. Position disclosure. I got out of the VXX today. Been trading this basically every day to the short side. They paid me really well. Just, you know, the time decay, right? And I love that the VXX has been easy to borrow. The time decay on this has been great. You know, just trading ranges in it basically back and forth each day to the short side. Just got to be careful because when it does pop, it can pop really fast. But the time decay on these things is just pretty brutal, right? It just only can go down by definition in the long run. But when they rip, like look what it did in the coronavirus crisis. This VXX ripped from $54 to $315. You don't want to be stuck short. You don't want to be stuck short at $53 when that happens. So you definitely do have to manage your risk on this stuff. But otherwise, if the market goes sideways, this thing goes down. If the market goes up, this thing goes down. If the market goes down, depends on the speed, but this thing might go up. All right, let's see what our indices did. Let's talk about the market a little bit. So the S&P finished down 0.2%. The Qs finished flat. The IWM finished flat, which is kind of where we opened. Like, if you remember pre-market, we were down a little bit pre-market, and at 8:30 the number came out, and that was today, right? That happened? I'm not losing my mind, am I? Let me double check. Yeah, that was today. At 8:30, the numbers came out, and we ripped higher. And I told everybody here on the team to watch out for the 8:30 a.m. pre-market low, basically, which is where, you know, when the news came out, that if we breach that low, at least short term, that's bad, because it means that the market is negating the positive news that brought it up. And you can see here, when we did break that, we sold off pretty hard, and we sold off deeper than I would have expected. I guess let me explain why. The SPYs here, so we've been really weak basically since Friday of last week, right? And we have options expiration tomorrow. So what we have seen almost every single month this year is the market actually sell off into options expiration. And again, Pat's note was great this morning, getting into detail, but also doing it in a simplified way on why that happens. So everyone should have already read Pat's note, his research note that he gets posted into the pro desk at 8:30 a.m. or so every day. And if you didn't read it, you should get in there and read it, because it was a really good one that really broke stuff down to its kind of basic core on why we've seen that happen so often this year. So, you know, once again, starting Friday of last week, we basically sold off into this options X. They're front running it now. Friday was a really bad day, negative Maribozu. We had already been kind of grinding lower into that. And then we've basically just seen weakness until yesterday. Yesterday was a strong day that helped to really snap us back. And it was not an inside day for the SPYs or the Qs, I guess, but it was an inside day for the IWM. So basically wanted to see if yesterday's strength could give some sort of upside continuation today, and it kind of didn't. You know, the pre-market price action starting at 8:30 that I just had up before was definitely productive, but once we broke whatever that low price was, I forget exactly, maybe 446.80 or something. Let me just look it up. This low right here from 8:30, 446.60, not 446.80, 446.60. Once on the intraday we broke that 446.60, that was telling you, at least short term, to take a half step back. Now, I would expect a pullback there. I did not. I would have been surprised, and I was saying this in real time to the team here. I would have been very surprised if we actually broke yesterday's low. Yesterday being kind of the first snapback, showing some strength yesterday for the first time, honestly, in a while. I would have been surprised if we negated that quickly just the next day. I've definitely seen crazier things in trading over my career, but that would have been a surprise. Instead, I started looking for a pivot. Once we were starting to get into like this 445.50 areas, when I started looking for a pivot. And we pulled back really deeper than I expected. Even when we had this first little pivot low, it just led to another lower high and a lower low. and it wasn't until almost 11 o'clock, which is a weird time for a reversal, that we actually, reversed that trend and started to bounce back. And then somewhat bizarre, Joe Biden starts speaking a little bit before 2 o'clock, and he's basically talking about, increasing taxes on the rich and increasing taxes on corporations, and the market ripped higher on it. So you can see here, starting at 150, we caught a bid, we broke that pivot, consolidated, continued, then the market was just looking really strong all the way into the close, where we came all the way back to pretty much where we started, but never broke yesterday's high. And that leaves us with this inside day here for the SPYs with a little bit of a lower tail. So it's conducive for higher price action. We're still above 446, so the S&P looks bullish, and based on what we're reading here on the closing price being above 446 and the more productive bullish price action from yesterday and into the close today, the big picture, we still want to be erring to the side of the longs, at least when we're looking at the S&P. Do the Nasdaq or the Russell give us a different picture? Nope, not really. Nasdaq gives us the same picture. Stronger day yesterday, some continuation today, and that was with the Nasdaq being a little bit relatively weak early on, and even on a closing basis here on the day. But we're still above 375 here in the Nasdaq. 2 strong days in a row. It's a bull market. We're just a little bit away from all-time highs. Nasdaq still looks really bullish. The IWM is still a bit more neutral. I'm a little disappointed in the Russell today. I kind of wanted a decent Russell day based off the opening price action that we had, how relatively strong the Russell was at 8:30. Let's go back to our pre-market chart. Look at the bounce here at 8:30 in the Russell. Just compare that to the bounce in the Qs at 8:30. Significantly less, or even compared to the SPYs, which also gave a decent bounce, but much less than the Russell. So this actually had to be pretty pumped up that we could see great relative strength in the IWM today. We have an inside day and up, and possibly get back above this 224 or even the 225 negative Maribozu highs that have been saying that the Russell needs to clear in order to become bullish again. So a little bit disappointing. I know that the whole market sold off when it lost that 8:30 a.m. low that I keep talking about, and the Russell did hold up a little bit better, I think, than the SPYs and the Qs, and actually was able to get above yesterday's high. But it's not flat close on the day. Right now we're up 8 cents in the IWM. That's not really what I was looking for. So markets were, I don't want to say necessarily disappointing or boring. They actually weren't too boring. The volatility was okay today, but the intraday price action was probably sloppy again. A couple of things that we were looking at for today. So first of all, one thing that we looked at today that did not work was the XLF. Along the same line of thinking, seeing the 830 number come out, seeing the TLT trade lower on it, seeing the IWM trade higher on it, and watching the XLF that had a decent day yesterday, I was looking for financials to be strong today, didn't get it. I was looking for an inside day and up. I was looking for it to get back above 38 and ideally to also get above kind of its negative candle from 2 trading sessions ago. It didn't happen. Financials ended up, they tried for like 10 minutes today and then were really weak. You can see that here with the XLF. Once these opening lows broke for most of these bank stocks, it was your signal to take your loss and get out of the way on them. Bank of America tried to be strong for 10 minutes, broke its opening low, get out of the way. Morgan Stanley, 10, 15 minutes, broke its opening low, get out of the way. JP Morgan, I commented in the VTF. I thought that this one looked the best based on the opening price action. Awesome, strong first candle here on really good volume. When we're already liking the XLF, interest rates are higher today. It's good for it. Breaking 160 is key for JP Morgan, and was able to do that on volume early on. I thought this JP Morgan looked great in the first 10 minutes of the day to also then totally fail. So that idea ended up not really working out for us. A big focus of mine was the Chinese names today. I was trading Alibaba. I know guys are also looking at JD. Some of you guys caught this JD off 75. So JD and Baba were also ideas from the morning meeting. JD held 75, held yesterday's low pretty much perfectly. We called out a buy in the first 5 minutes of the day versus 75. I know some of you guys are able to capture that. Struggled here a little bit with that ADMA, made a higher low. Looked like maybe this was going to be a failure candle, but led to another short-term intraday higher low that led to basically a gap fill and then strength. I didn't trade JD. I was trading BABA. I was kind of commenting on the tape action in BABA. So first of all, pretty quickly, this BABA got below, like the second the market opened, traded below 155. And then that 155 was acting as resistance. It tailed up here, and specifically on this tail, I was watching it really closely. So I commented on this break higher here. So basically what happened there was the 155 figure, that's what we call a whole number in trading, broke. And there was this really fast uptick, and then instantly it came back down below 155. That's a bad signal from tape reading. And again, just take a half step back on my half step back. If you're a newer trader, focus on charts, not tape reading. But I am decent at reading tape, and it is something I pay attention to in certain circumstances, especially when I have a decent position. I remember being annoyed because on that little snap higher, the high here is 155.17, and I had offers at 155.24 and 155.28 for some size there too, and I never got filled. And then it immediately snapped right back below 150, which I know is a bad sign. Why is it a bad sign? Because when you see that rapid 17-cent uptick, that's usually stops that are triggering. They could be buy stops or new longs entering in, maybe some shorts getting stopped out. But when you immediately come back down, it means all those buy stops that triggered above 155 are out of the money. And what that usually leads to is very quick selling, because a lot of times that's real short-term traders, scalpers, robots, whatever. So then they're out of the money, so then they sell the stock down. And, I didn't get that fill on the offer there by, 10 cents, less than 10 cents, and then saw that, knew it was no good, but then, before I could even cancel my offer, it had already come down 50 cents. Comes back down to 154, snaps back to 155, a lot of selling the second time around, heavy selling in front of 155, fails again. And then right here at 154, it did literally the opposite on the downside of what it did on the upside of 155. At 154, it got to the price. It broke 154. You saw the really quick snap down. It was only a small amount, 7 cents. But you saw that really quick snap down get absorbed, and immediately it's above 154. And it was like the same thing that was happening there. There were stops that got triggered below that 154. I don't know if they were short sellers or longs getting out of the way, but that immediate snap right back and go, oh, there's a buyer here, and they just shook people out. And that's when this thing was actually able to rip higher and then break that 155, give the upside continuation, fill the gap, pay us pretty well. And then the stock did nothing for the rest of the day. So that turned out to be a big focus. One of the other trades of the day for today that I was not involved in, but you guys were calling this out really early on, was Palantir. One of you guys brought up Palantir in the morning meeting today. I don't remember who it was, but very quickly that opening volume was coming in, option flow was coming in, and the thing turned out to be a really solid mover today. I think by the time I typed it up, it was already like 27.50 or so, and I didn't really want to jump in and risk 50 cents on it, though it would have been worth it. It went still. But some of you guys were focused on this early, and this is exactly the type of opening volume that you want to see, is it's kind of clearing a key daily level and the option flow coming in. So that was also a really solid trade. And that's pretty much it. I know there was some focus, even though I wasn't involved, on LVS today. So LVS was able to hold yesterday's low. We discussed in the morning meeting possibly on the gap down from the downgrades being long versus yesterday's low. So I think some of you guys were able to sneak into that here early, and then it caught a bounce. Some of the Chinese names actually caught a bounce and then ended up kind of grinding higher. LVS was better than Win, I thought. Win was real tricky. It didn't catch the bid in the same way that Vegas did, and broke that opening low, which Vegas did not, which if I was trading Win, I definitely would have gotten stopped out there. But I didn't, so that one worked not as well. But the LVS was okay, I think, for some of you guys who are focusing on it. And then the only other thing we really spoke about was the semis today, like SOXL. We're talking about for some upside continuation on this. I ended up not watching it too closely, so I don't know how you would have executed it. You could have gone long versus yesterday's low because of the shape of the daily candle here is kind of a continuation hammer off the ADMA. So you could be long versus that. It actually gave you not so bad risk. You know, if you bought it up above 47, you could have gotten some stock versus like 46.75 from yesterday's low. Or you could have been looking at it in the afternoon and taking that trade. I don't like putting on a ton of new trades, though, between 11 and 2, to be honest. And I know here it's 1:45, so it's almost 2 o'clock. But I tend to be extremely selective between 11 and 2, so I probably wouldn't have been involved in it. And that's pretty much it. You know, we saw some, you know, speculative action in stocks that were SPACs again, like, you know, TMC. There's been a lot of chatter on this one. I think OPAD this OPAD was sick. Another SPAC, rocking and rolling. Even, dare I say it, BOEX tried to catch a bid at one point today. Huge volume in this thing today and still closed at 10. So that's it. That's all I got. That's today's update and the focus, and you know, I think we did some things well, and you know, that's it. All right, so let me go to the VTF here for questions. Oh, I was supposed to mention this again in the beginning of the video. For people who are just watching on YouTube, we're doing this open house thing next week, so register for it. You get free access to the ProDesk virtual trading floor for the week next week. So everyone is invited to come on in. It's probably going to be a little bit crowded in here, but we'll keep it professional and we'll keep it focused. The decay will pay. Jerry here. What are your thoughts of AXP trade inside 5 at the open? Decent volume, right? Yeah, I remember typing this up and thinking that it looked good, but it was a little bit extended. Yeah, and that would be the exact same thought that I have here. I thought that this looked really good for continuation. I was a little bit worried about the extension. So AXP was also something we discussed in the morning meeting today because it got upgraded, and it's an inside day and up. And I normally don't like this chart, actually, where you have an inside day within the confines of a bigger consolidation. That's usually not my cup of tea. But if I can combine it with an upgrade, it definitely has me a little bit more interested. And the opening volume here was great. It gapped up really well. You could have been long versus yesterday's low, at least initially, and then probably could have raised your stop to the low of the day pretty quickly from there. So obviously, regardless of which one of those stops you used, you eventually would have gotten shaken out of it. But to directly answer your question, did it look good for a trade off the second bar? I think so. The concern would be that it's still a little bit extended, and technically it never triggers. So really, whether you lost money on that trade or not depends on whether you cheated on the trade. Because the technical trigger, like if you want to be technical with your execution on it, and I cheat sometimes also, but if you want to be technical with the execution, you really want to be buying above the second 5-minute bar's high, which is 163.99. So you'd be buying 164. And this bar never breaks 164. Never ticks 164, I should say. So 163.99 is the high. So in theory, you actually never get triggered into this. So if you took this inside bar and up trade, which I like, you never get triggered in, so you never actually lose money. If you cheated, which again, it's sometimes I do that when I really like other things, like great opening volume, an upgrade, you know, inside day and up. Sometimes I'll cheat because I can get a better price. Better price is going to mean better risk reward, but you also have a lower probability of success because your trade never actually triggered. So you're depending on whether you cheated or not would depend on whether you lost money on that inside bar trade. But I think it was a decent one. Robert here. How would you manage the following situation? You recognize positive retail numbers, focusing on retail stocks. Oh yeah, I forgot. Some of you guys traded that Macy's today. That was also a really awesome opening drive trade that some of you guys are focused on based on the retail numbers. Decent looking daily chart. Really on the daily needs to get back above 22, but that was solid. So you're focusing on some retail stocks like Lowe's, Macy's, recognizing the strength at the open. But if the SPY breaks the 8:30 news price, would that be a signal for you that the retail stocks have relative strength and they can continue higher, or that you would take the SPY signal to take your hands off from retail as well? Thank you. The answer here is both at the same time. Both at the same time. we have these different layers of probability that positively, negatively impact our trades. So if you're looking at Macy's and you're seeing relative strength, well, that's a great thing for your long in Macy's. If you're looking at going long any stock and you see the market breaking down, well, that's the thing that's against your trade. So I'm not saying don't take the trade. I'm saying you want to try your best to recognize all of the layers of probability that are for and against it and the reasons why on every single trade that exists. So it's pretty rare to have a situation where you've got every single one of those layers of probability perfectly on your side. And when you do, especially if you can couple it with a decent risk reward, then you're looking at an A+ trade. But most trades that you're taking are not A+ trades. A+ trades are rare, right? They're rare where everything lines up perfectly. And you still got to trade, you still got to make a living for yourself, so you're still involved in trades that maybe aren't quite as good, don't have everything on the side of the trade, but you can make a living for yourself and you can be consistently profitable off of them. So basically, Robert, to answer your question is take the trade, but just recognize that you've at least got that one layer of probability, which is the market, which is against you. And I would even say, though, that as you're looking at the market breakdown, that big picture, I'm still thinking I'm getting a bounce somewhere. I'm just, the market's telling me when it was first breaking that low to be a little bit hands-off, at least for a while. And it wasn't more until like after 10 that I was looking for the market to actually pivot, which eventually it did. There was a deeper pullback than I would have expected. But yeah, you recognize the relative strength, you recognize the trading on some potential news, better volume than typical for Macy's. It's a good trade. It's one you want to be in, but maybe you want to take a little less risk because you're fighting the market a bit. So that's your question. Anybody else, guys? It's 4:32. We already went through all the questions. Usually there's a line here. I don't mind doing a shorter meeting. I'm a bit tired. I kind of had a late night last night. But I also don't mind helping you guys out because that's what the chef is for. Can you read this? One of the traders on the team sent me this hat. It's kind of silly. I like it. Anybody else have anything for me? Where'd Pat go? That's my guy to check on if there's anything coming from YouTube because I don't actually look at the YouTube comments. I'm just looking at the virtual trading floor, but usually Pat will copy and paste any questions or comments from the YouTube into the virtual trading floor. But Pat, who sits right there, is not in his seat, not learning from this knowledge that we're dropping, and also not here to let me know if anyone in the YouTube is posting any comments. Jordan, since Pat's not here, if you can copy and paste some of those into the VTF for me, Pat usually does it, I would appreciate it, because I do like to answer everybody else as much as I can. Aaron says, can you discuss refreshing buyers and sellers? Sure, I can. Definitely going to recommend that you look at the tape reading class in the training program, because that's where I get into refreshing buyers and refreshing sellers. But basically, a refreshing buyer or a refreshing seller is something that you would see in the tape or the level 2, and it is one of several ways to actually disguise your size in trading. So just pulling up my level 2 here and my tape for Bank of America, which I have no position in, BAC. So you want to be able to read this properly, right? So Bank of America is a thick stock. So thick stocks mean that they have a lot of liquidity. So they tend to have a lot of bids and a lot of offers clustered on every penny, and they tend to, thick stocks tend to only have like a 1 cent spread, which here it is, Bank of America, it's 435. The market's been closed for 35 minutes, and it still just has a 2 cent spread with 24,100 shares as the inside bid on ARCA at 40.43. So you need to know to be able to learn to read that. And being able to recognize liquidity is important, by the way, especially when you are trading stocks that have a little bit less liquidity. If you recognize what I call liquidity points, if you're a bigger trader, you want to know those liquidity points because you can hit into those liquidity points if you have to and utilize the liquidity that you see in the level 2 to limit your slippage. So that's important. None of this answers your question. So a refreshing buyer, a refreshing order, which could be a refreshing buyer, which would be a refreshing bid, or it could be a refreshing seller, which would be a refreshing offer. A refreshing order is an order that is composed of a display size and a reserve size. And the display size plus the reserve size equals the total size of the order. The way that I can best show it to you guys is by, there we go, is by actually doing it myself, by putting an order into the market to give you an example. All right. So when I bring up my bid box here, this area for you should normally actually be empty. It should look like that. So right now, I am set to bid 1,000 shares of Bank of America at $40.43. And because I trade as a professional trader, I'm trading with direct market access. If you're trading in a direct market access retail account, you also have the ability to do this, where you can choose your routing. So I can choose to route to ARCA, BATS, EDGX, the New York Stock Exchange, Nasdaq, EDGA. There's others, but that's all I have my system programmed in for. So again, normally this box for you guys who are on the same software as me should be empty, which means that if I press enter right now, what you're going to see, so right now at $40.41, there's 100 shares on ARCA. So if I press enter and I put 1,000 shares here at $40.41, this should go from a 100 shares, to an 11, 1,100 shares. Ready? Let's watch. Boom. There it is. I now have a 1,000 share bid here that is being displayed to the market. I don't want to actually buy that stock, so I'm going to cancel that order. Now, what this little box does here, this is actually going to make my order a refreshing order. So this is what we call the display size. My total size of my order is 1,000 shares, but I'm only going to display to the market 100 shares, and I'm going to hide the total size of my order. I'm going to hide it so that you can't see that there's more stock here than I'm actually there to buy. And in this case, I'm going to put my order out for 1,000 shares. It's only going to show 100, but I could make that 10,000 shares. I could make that 100,000 shares. If I had enough money, I could make it 1,000,000 shares, right? So, ready? I'm going to press enter, and now what you're going to see it's still a 1,000 share bid. It's still a 1,000 share bid that I'm placing, but I'm going to go on ARCA 4041. There's already 100 shares there, and it's only going to go to a 2. Bam, 2. That's because I just implemented a refreshing order. I'm hiding my size. So I use refreshing orders when I am trading size. When I say size, I mean generally anything bigger than a 500 share bid or offer in any stock that I consider to be medium or low liquidity is when I use refreshing orders. The upside of utilizing a refreshing order is that I'm hiding my size to the market. So the robots that are going to come in and chisel that order are not going to be able to recognize that I have that liquidity that's there, so they're not going to be able to chisel me in the same way. The downside of using a refreshing order is a couple. One is I don't get rebated on stock I don't show. So again, when you're on direct market access, if you're putting bids into the marketplace, when I put that 1,000 shares there, ARCA, the exchange I'm routed to, is actually going to pay me money for that 1,000 share bid that I put into the market if it gets filled. But if I'm not showing the size, they're not going to pay me for it. That's one downside. The other downside is I'm always going to go to the end of the line. So before, when there was 100 shares there and I put 1,000 shares on top of it, if the stock goes down to 40.41 and there's prints going off on ARCA, whoever it was that has the other 100 shares there is going to get filled first because it was there before me. Then on the next 1,000 shares, and let's say that Pat behind me, who's back now, let's say that Pat puts another 1,000 shares on the bid at 40.41 on ARCA, he would be after me, right? So first it's the person showing the 100 shares, then it's my 1,000 shares, then it's Pat's 1,000 shares. But if I'm refreshing, I go to the end of the line. The size that I'm showing is only going to be the size that gets filled first, then I go to the end of the line. Meaning, right now, if Pat put 1,000 share bid on top of my bid, the first print that goes out, the first 100 shares is going to be the other 100 shares that was there. The second 100 shares is going to be one of my 100 shares because I'm displaying 100 shares. The next 1,000 shares is going to be Pat, and then it's going to come back to me. So it's actually a terrible idea to use refreshing orders in thick stocks like Bank of America. You don't want to do it because it's so thick. There's constantly new bids coming in. You're always going to the end of the line. This type of stock, you always want to show your size. So that's kind of what a refreshing order is. Now, when you're reading tape, you also want to learn to be able to read refreshing orders. Because, again, if you don't know, if you can identify that there's a refreshing bid at 40.41, the thing about it is you don't know how much size it's there. So maybe it's a piker like me who's only there to buy 1,000 shares, or maybe it's a massive institution who actually is there to buy 100,000 shares or 1 million shares or some massive amount of size where that's actually significant. So you want to learn to be able to read that. How would I know if there is a refreshing bid at 40.41? Well, the stock trades to that price, and I am seeing that there's only 100 shares bid at 40.41 on ARCA, but on the tape, see the last print that just went off, someone hit the bid, right? On the bid right now, there's 22,100 shares on ARCA at 40.43. Someone just hit that bid for 1,900 shares on ARCA. My A here stands for ARCA. So now, if it works its way down to 40.41, where this 100 shares is, and all of a sudden I'm seeing, wow, 100 shares just went off on ARCA, and another 100 shares, and another 100 shares, and 1,000 shares, and another 1,000 shares, another 500 shares, another 600 shares, another 800 shares. And I'm seeing all of this liquidity printing at 40.41 on ARCA, but I see there's only 100 shares that's actually being displayed. Well, there you go. It's a refreshing order. And maybe it's significant. Maybe it's not. That you can't really know so well. If you get kind of more in depth on your tape reading, there's kind of some techniques where you can have an idea that it's important or not important, which I'm not going to get too into because it's starting to get complicated. I was going to make one other point, but I forgot what it was. Oh, but one of the most important things about that, look, I don't trade purely off tape anymore. Or I should say I trade purely off tape very rarely. The tape's not as important as the charts. And if anything, honestly, guys, overanalyzing what you see in here, especially if you're a newer trader, is going to hurt you more than it's going to help you. You don't need to be reading every print in the tape all the time. What tends to happen, I already have kind of experience with it, so I'm kind of good at it. But what happens with newer traders when they're trading and trying to read tape with their trading is they get in their own way. You got this great trade that's working out, and you think you see a refreshing offer, so you freak out and you sell your position, and then you miss the next 60-cent move on the stock. I really don't think that guys, for the most part, should be making decisions based off tape. But one thing that can be beneficial would be, let's say you recognize that there was a refreshing buyer at 40.41, and you had a game plan where you were bid 40.39. Do you really want to be bid to go long at 40.39 when there's a refreshing buyer 2 cents above you? No. So if I saw that, let's say if I was at 40.39 for my 1,000 shares, bam, and I highlight myself in pink, by the way, it's how I know they're my own orders. I have hotkeys that can bring my bid and offer up a penny really quick. So if I'm sitting here, 1,000 shares, 40.39 on ARCA, I want to get this stock. Oh my God, 40.41's refreshing on the bid. Bam, I just went to 40.41. And because he's refreshing, I'm going to go on top of him and I'm going to get filled before him for the reasons I just discussed. And you see how fast it was for me to bring my order up 2 cents? It was like that. Because I use hotkeys for my trading. So that's an overview of stuff that you'd want to know about refreshing buyers and sellers, but you know, don't overthink it. So that's your question there, Aaron. Can you go over pivot points in winning trade management? Sure. I'm also going to suggest that you watch my game planning class, because I go over that in detail there. So I know that we were having a conversation in the VTF today because you got stopped out of a good JD long in this pullback. And when I saw you, and guys, by the way, you know, just to give you a compliment, Sahil, great on you for putting that information into the VTF, because we can now use that information to help make you a better trader. There's no one in this room who's a perfect trader, who is, you know, including myself. So no one should ever feel embarrassed about posting a mistake or posting information or posting a bad idea or anything like that in the VTF. We all, make our own decisions. We all make our own mistakes. It is what it is. But because you communicated, hey, I just got stopped out in JD, and I saw it, and I typed up JD, and I said to you, I have no idea why you let yourself get stopped out at this price. That enables us to open up this discussion that is making you a better trader. And that's my biggest thing. I know, Aaron, you and I have spoken about this also, and now you do a really good job with your questions also. So it's really important. We got traders of all experience levels who are on the virtual trading floor. I don't want newer entry-level traders to ever feel like they can't or shouldn't post questions because they feel like the question is too newbie or whatever it is, because we got some really experienced good people in here. Forget it. Don't worry about it. We got to make you better. Look out for yourself. So post the questions. So with JD, when you're implementing a trailing stop system, or you're even choosing your initial stop loss, it always needs to be based on something off the chart. So if you got stopped out, and I think you even said it was a trailing stop, if you got stopped out somewhere on these two bars, there was no signal anywhere in this chart the entire day that your stop should be here. The only signals I see on where, if you're long JD, so first of all, we discussed a trade versus yesterday's low. We called it out. I don't know if that's where you bought, but we called it out when it was at like 75 quarter that you could go long versus yesterday's low. So I don't know if that was your original trade, your original out. But here are the following acceptable stop losses if you were long JD in the beginning of the day. 1, yesterday's low. 2, when it starts working out, today's opening low. 3, when it pulls back and makes a higher low, and then the new high comes in, and only after the new high comes in, you could have raised your stop to this pivot low. I'll even accept the low of this green bar here because the volume picked up on it. It was a little bit of an ignition bar, and if you're looking at BABA at the same time, if you're trading BABA, you should be looking at JD. If you're trading JD, you should be looking at BABA. I wasn't trading JD. I was looking at BABA, but I was typing up both because I know that they have a correlation. And you see that this is like a real wake-up bar for the stock, and the volume picked up. I would even accept the low of this positive Maribozu on the 5-minute chart as an acceptable stop loss, or a raised stop loss, because if this candle ever gets negated, it's bad for the stock. But there is nowhere above, at a minimum, the low of this bar, which is 75.35, that you should have a stop loss anywhere. I don't care if it's a new trade that you're initiating or it's a trade that you've been in and you're trying to raise your stop. There is nowhere in here. And if you initiated a trade, maybe even initiated a trade in this bar because you saw what Bob was doing, you saw the stock wake up, whatever, fine. You still got to use the right stop loss. If you can't afford to use the right stop loss for your trade, you can't afford to take the trade. Or you have to take it with less stock. Instead of taking 1,000 shares, you take 400 shares so you can give it the appropriate amount of room to the spot where it actually matters to the stock. And the reason, by the way, that pivot points like this are important and are good technical spots for stop loss is because of what a pivot represents. A pivot represents the exact spot, the exact penny where buyers took control from sellers or sellers took control from buyers. That's what it is, right? Right here at this high, sellers took control from buyers. It's going up, and then it starts going down. Sellers took control from buyers at this high. Right here, this is a pivot low. This is the exact penny, 75.24, where buyers take control from sellers. Bam, they drive it up. Right here, this is a pivot high. This high here, 76.17, that is the exact high where sellers take control from buyers, and they, bam, drive it back down. Here's your next pivot low. Here's your next pivot high, pivot low, pivot high, etc. This turned out to be a great trade. If you were trailing it very tight, you raise your stop to here, maybe you raise your stop to here, you raise your stop to here, maybe, nope, you don't raise your stop to there, you raise your stop to here. You would have been in this all day. Maybe you raise your stop to here. You never get stopped out. If you went long JD in the first 5 minutes of the day and you follow my trailing rules from my trailing class, you are in JD till the close. And if anyone bought JD today and were all out of their position before the close, I would make the argument that you are reward limiting. And this goes back to yesterday afternoon's meeting. If you guys remember, I got a little fired up in yesterday's afternoon meeting. We were talking about why traders fail. We were talking about risk management. We were talking about reward maximization. We're talking about the number one reason why traders fail is because of risk management. The second reason, though, sometimes is traders don't put themselves in a position to maximize their reward. I would argue to anyone here that if you bought JD in the beginning of the day today and you didn't have at least 10% of your stock, I'm not saying that, I'm not saying 100%, I'm not even saying 25 to 50%, I'm saying 10%. If you didn't have at least 10% of your core position that you bought in JD at the end of the day today, you are not maximizing your reward in your trading, and it's hurting your P&L. So definitely make sure that you kind of review that class, and I hope that helps, and I appreciate the question. Thanks, guys, for the copy and pastes from YouTube here. Marty saying, frustrated, I think it's from Marty. Frustrating for me, no continuations and false starts with various equities, tech stocks and Momo stocks, but AMD had to close right at the 8 DMA. And check out SOX. Which one is that? SOX again? You mean SOX L? That might mean SOX L. Yeah, AMD woke up a little bit, but I don't like it today. I don't like the daily chart. I know it woke up in a big way here. That's not going to be on my radar because the daily chart I didn't think looked good. Yeah, I mean, look, summer in particular I thought was a difficult trading environment because we weren't getting a lot of follow-through on trades. I actually think that the environment has started to get better again the last couple of weeks, where we're getting a little bit more follow-through. It's still not, great, but we're getting a little bit more follow-through on trades. If you're focused on stocks that are in play and you're picking and choosing the right names, and it seems to be that most days here we're having at least a couple ideas in the morning meeting where we are. Palantir today, great example of a great trade that gave follow through. JD was decent, Baba was decent. Like I just explained, you could have held that JD for the entirety of the day. So it's definitely been a little bit more of a selective market where you're getting that follow through, but recognizing what's in play has been solid. So I hope that helps there, Marty. Try to focus on, the names that aren't showing. A big thing for me recently has been that opening volume. The names that aren't showing that opening volume have not been given the follow through, and even sometimes the names that are showing the opening volume aren't given the follow through. Next year from Jack, how do you feel about Z? Yeah, I like it. It's a potential double bottom. You said double bottom. I'm going to correct you a little bit and say potential double bottom. At 90 and a bullish engulfing. Yeah. So the reason why I say potential double bottom is it's only a double bottom if it actually clears the top of the midpoint of the W, which would be about $100 right in here, and that's when you have confirmation of a double bottom. So right now you're just looking at support where there are equal lows here that create a potential double bottom. My only issue is I don't think it should have gotten back down here today. First of all, I like Zillow. I like the company. I like the pattern that we're looking at. I like the support that's being held. A few trading sessions ago, here on September 13th, it had a beautiful candle where it broke this low by a few pennies. I actually like that, and was on great confirming volume. Closed really well. This needed to be the low of the double bottom that gave continuation. I want this testing $100 by now. And I know, fine, maybe there was a weaker day in the market or whatever. I don't love the fact that it's actually a third test of this level. I could be being a little bit over nitpicky because it did have a good candle today. So it's still, the trade itself is still intact. You could definitely still be long off $90. I still do like the pattern, but the longer it spends down here and the more times it tests this 90, the lower the probability that this thing is actually going to work. But so far so good, decent looking candle. I agree with you, and I like it. This has been one that I've been speaking about pretty regularly in the meetings. Thanks again, Shoaib. From Kyle, is Apple, time for the daily Apple question. Is Apple looking like a buy yet? I'm sitting on too much cash at the moment, and I don't like it. Yeah, I think it was Ray Dalio was just on TV yesterday saying how cash is still garbage. I mean, again, I have the same answer basically to you as yesterday. It depends on your time frame. We went over the FANG names in the morning meeting today. I think Google looks much better than Apple right now. I think Microsoft looks much better than Apple right now. I think Amazon looks not bad. Facebook I don't like as much. Maybe if the Facebook can clear up on the inside day, and I also don't like the company. Apple is not the best in breed looking stock when it comes to FANG names right now, at least technically. Not a bad candle today. Inside day after this tail, so let's see if we can get some sort of continuation here. But it's got a lot of resistance ahead of it. It's got to clear today's high. It's got to clear 150. It's got to get back above the moving averages. Apple still has a little bit of an uphill battle. I think that the stock looks neutral. It's not giving me a buy signal. It's not giving me a sell signal either. That's why I call it neutral. So, Apple. I'm not trading every day. No FOMO. Cash is a position too. Yeah, even though we just downed on cash. But I agree with patience. I'm more patient waiting for the moving averages to touch and go. Proper setups, super important for me. Yeah, I'm an active trader for sure, but I also actually consider myself to be really selective. I'm really selective on what I actually choose to get involved in. I really want to have that trade setup with the layers of probability on my side. So, I support the thought process there on, being patient, waiting for your setups. BBIG sloppy. We want to see it hold the 750 area and start to squeeze up. But you got to remember with a lot of these squeeze type names is a lot of times they are short lived. So we'll see how this one plays out. I honestly don't have too much of an opinion on it. We definitely want to see 750 continue to hold. Thanks, Jordan. Do I think that Vive gives continuation? I haven't looked at Vive in a while from Tian Hao. Is Vive Chinese? I'm not sure. I want to know the answer to that question, but I'm actually not sure. Yeah, does it give continuation? It's really hard to say because it kind of already gave the bounce that you can expect. It bounced back to the ADMA. It could give continuation to 313. Doesn't have to. I think overall the chart is sloppy. Could you argue even that there is a head and shoulders here, and the neckline was at 311 and broke, which is definitely bearish. 310 to 311, that would be bearish, which would make you more inclined to short it than buy it while it's below 310. So I certainly wouldn't come in tomorrow at this price and buy it. It's a terrible risk reward. Trying to get a move to 310, 313, and if you're lucky. So I don't think it looks great, Tian Hao. I would just be patient with it. Thanks, Lee. Thanks, Shoaib. Thanks, Jordan. So low vol shares would be trading around 50K. So low vol, I think you mean low volume, not low volatility, and the way we would want to describe that is thick or thin, right? Because price of the stock matters when you're talking about how thick or thin a name is, and also the volume, right? Cheaper stocks are going to tend to be thicker than more expensive stocks. Stocks that have more volume are going to tend to be thicker than stocks that have less volume. But these are kind of just general rules. And I really don't know what you mean about the 50K number there. One of the quick things that I always do if someone asks me about a stock that I don't know well, that the first things I always do is, and you guys see me do this in the morning meetings all the time, if I don't know the stock well, I take a quick look at the daily, how much volume does this do in a typical day, and a quick look at the price. So if I looked at this Vive real quick, I don't trade this one really, I don't know it very well, I'd be like, all right, it does 500,000 shares a day or so, it's about a $300 stock, this thing's probably trading fairly thin, not impossibly thin, not where it's untradeable, but you got to recognize there's not going to be a lot of liquidity. And then one of the things I like to do real quick is I'll look at a 5-minute chart sometimes, and if I see gaps in a 5-minute chart, which I see a couple of small ones here in V, but it's really not too bad. If I see consistent gaps in a 5-minute chart, that usually also tells me I want to stay away from it. Yeah, no problem, Aaron. So you can rewatch the class. I know the tape reading stuff can be a little bit complicated. So you can rewatch my class, and also now that we're doing these afternoon meetings and we're live streaming them onto YouTube, you can rewatch the afternoon meeting. So I know I blasted through that information on refreshing buyers and how the order types work and stuff, but you could go in and you can rewatch the YouTube. That's one of the main reasons, by the way, why I'm doing the YouTube stuff, and I had to get all this compliance approval to be able to do it, is because so many of you guys who are on the pro desk have asked me, hey Derrick, I'm missing today's meeting or whatever, can I get a copy of it, or I'd like to rewatch this one. Well, now you'll have access to it, right? If you can't be here at 10 after 4 one day, you can watch the video on YouTube later, or if I blasted through a complicated topic like I just did on refreshing orders and stuff like that, a little bit into routing, you can go and you can rewatch that as well and dissect the information a little bit slower. That's one of the biggest reasons why I'm doing this stuff. Seller pound 27. For it to be an inside day, do you want to see the body of the second bar inside the first one, or the wicks too? The wicks too. It's got to be the wicks too. It's the full range of the candle. Like the IWM yesterday had an inside day, so it's got to be the full range of the candle. If a tail went above the previous day's high, it's not an inside day. Can we do a hotkeys class? That would be a Pat specialty. I'm terrible at the software. My keys have been the same forever. Please roast me when necessary so I don't lose money. Happy to. Thanks, Christian. I appreciate the comment. I trail too tight when I have too much size, and that's when I lose upside potential. So one of the things that you can do, Rick, when you're heavy in a stock, is you can trail on multiple time frames. So if you're really heavy and you feel like you got a lot of size, you could trail some of the position tight and some of it looser. If you got 2,000 shares, you could trail 1,000 shares really tight, and that other 1,000 shares, you're spreading it out, the 5-minute, the 15, the hourly chart, whatever. So I do that all the time, right? I have multiple stops in place. I get stopped out of some, but the other's still intact. Maybe I give back more profit, or maybe I get stopped out of some, but the trade continues, and I'm able to still be in there with it. Scrolling through your comments here a little bit. Please don't read the following out loud, internal only. Okay, so I won't read that. Scrolling through a lot of comments. A Pat hotkey video class. Pat says is in the works. How I think Vive chart is more like Wix at 817. On August 17th, you think the Vive chart looks like that currently? I don't. Not anymore. Maybe coming into today. Coming into today, this would have been better because you had more extension. You had these little dojis down here. But now that the move already occurred, I don't want to chase it after. Like even here, if you want to look at this Wix, first of all, this is better than Vive because it was more extended, right? I would like if this candle here had more volume than it did, but fine. But now, like, if you're buying Vive tomorrow, that would be like buying Wix on this day. And yeah, eventually it does give continuation, but this is much harder. Right, it had the big up day into the ADMA, and then it took 2 days of rest before giving some sort of continuation. And they don't even always give that continuation. Sometimes they have that big up day into the ADMA, and that's it. Then it rolls over and kind of dies out. You want to be recognizing this day, or for Vive, you want to try to be recognizing today's day before it occurs and being involved in it and anticipating that move, which for Vive I think is tough. All right, it's after 5, so no more new questions, but I'm happy to answer the questions that are already in here. Hashtag CPNG looking to be putting in a new base. Yeah, $29. $28.86. Haven't been able to take the trade, even though I have a trigger. Any suggestions to trade execution, not freezing up when to enter? I get that question a lot. I don't have perfect advice for you. The biggest thing for me is if you did the research on a trade and you create a game plan and you're struggling with certain execution things, I think it benefits you to actually write down the game plan on a piece of paper, and then when it's written on the piece of paper, follow it. And of course, that's going to be the harder part, right? Is still following it. But for me, I used to do this. I got notebooks full of game plans. And for me, if it was on the piece of paper, this is the game plan. You already did all the work. So I would tell myself, just follow what's written on the piece of paper, stupid. That's what I would tell myself. I'm not calling you stupid. I'm sure you're not. That's the only real piece of advice I have for you there. Write it out, and then follow it, and then analyze. Write, execute, analyze. Robert's saying, not sure. Maybe I missed your question, Robert. Not sure if you noticed my question, please. Which sector should react opposite when we are having positive money flow into retail? Hard to say. You could kind of view retail maybe as like defensive a little bit. So which is going to trade the opposite of that? We're stretching things here a little bit. Maybe the tech type names, but I don't necessarily think that anything. It's not like a lot of times we see IWM and Qs kind of trading differently from each other. So that's kind of where I'm getting that from. But I don't necessarily think that anything should be trading an opposite of retail when retail is strong. Again, it could just be a little bit of a defensive play. From Fabio, do you know why is CFD illegal in the USA? What is CFD? Pat, you know what CFD is? I don't know what CFD is. Some sort of OTC product, Pat thinks. It's contract for difference. They trade in the EU. I've heard of it. I've heard of it. I've definitely spoken to some European traders in the past who were trading CFDs. I think I even spoke to an American trader who was trading CFDs in a European brokerage because the brokerage was able to skirt the U.S. laws on leverage and was able to get more money access. I would never recommend doing that. I don't think that's a good idea.
So is the concerns over leveraged OTC products?
Leverage, right?
Following the 2008 financial crisis.
Following the 2008 financial crisis. Yeah, Fabio, I really don't know is the direct answer. I think it might have to do something with leverage. Pat's given, reading something off the internet behind me about the financial crisis with leverage. I honestly don't exactly know. Final one here, Sebastian. I appreciate it. It's just a compliment for me. I appreciate that, Sebastian. Hope you're participating in the virtual trading floor Pro Desk open house that we are doing next week. So check that out. Should I give another plug for the Twitter? At Pro Desk VTF on Twitter. Derrick the Trader on YouTube. Subscribe, follower, all that stuff. We're trying to build up a bit of a thing here. I'm going to see all of you guys tomorrow. Have a great night.